For many dividend investors, the United States makes up a huge part of their portfolio. And the reason is obvious. The U.S. is home to some of the world's biggest and most established companies, firms that have paid dividends for decades, survived countless crises, and still dominate entire industries today. On top of that, the U.S. has a strong dividend culture built on reliable payouts and a long tradition of rewarding shareholders. But having too much U.S. exposure can also become a real risk, especially for us here in Europe. If the U.S. economy struggles, your whole portfolio feels it. And if the U.S. dollar weakens, your portfolio value drops as well, because every euro suddenly buys fewer dollars. Since the beginning of 2025, the dollar has already fallen sharply against the euro. This is one of the reasons why the European stock market is gaining popularity right now. For dividend fans in Europe, one interesting option is to look at European dividend ETFs. But there are so many of them. Which ones are actually worth considering? In this video, I'll show you 3 European dividend ETFs that I believe are genuinely solid choices. We'll compare them side by side, and we'll also look at the cash flow you would receive if you invested 100,000 euros into each of them. And the results at the end are definitely worth sticking around for. Quick disclaimer before we dive in. This is not financial advice, just my own opinions and experiences. All right, let's move on to the ETF selection. Here are the criteria I'll apply to choose the ETFs for this comparison. First, we're focusing only on dividend ETFs that invest exclusively in European countries. That also means we're leaving out 2 very popular dividend ETFs that many investors like to use: the Van Eck Dividend ETF and the iShares Global Select Dividend ETF. They invest heavily in Europe, but they're still global products, not strictly European. Next, the ETF should have at least 5 years of history. Newer ETFs simply don't provide enough data to draw meaningful conclusions. The fund size shouldn't be too small. I prefer funds that are close to or above 100 million euros in size. Now, let's talk about dividends. From a solid European dividend ETF, I would expect a dividend yield of at least 3.5%. The dividend payments should also be reasonably stable. Ideally, we'd like to see a bit of dividend growth as well, even if European ETFs usually don't offer much in that area. But stable payouts are really important to me. And because of that, some well-known dividend ETFs don't make it into the final selection. Take the iShares Euro Dividend ETF, for example. With a fund size of 1.2 billion euros, it's extremely popular. But the dividend payments don't convince me. There's neither stability nor growth. So, here are the 3 ETFs that I believe offer a very solid dividend investment. Franklin European Quality Dividend UCITS ETF. WisdomTree Europe Equity Income UCITS ETF. Invesco Euro Stocks High Dividend Low Volatility UCITS ETF. In the next step, we'll compare these 3 ETFs side by side and check a few key facts. Things like performance, portfolio composition, and of course, dividends. If you enjoy my content, a like and subscribe means a lot. Thanks. For this comparison, I'm using Extra ETF because it provides the data I need and presents it in a clear way. Let's start with the total return. Here you can see a comparison chart that begins at the end of 2017. The total return performance of all 3 ETFs over the last 8 years has been quite solid. But the Franklin ETF really pulled ahead of the other 2. If we add an MSCI Europe ETF as a benchmark, we see that these dividend ETFs kept up quite well, especially the Franklin ETF. So, overall, these dividend ETFs are not far behind the broader European stock market, and that's a very positive sign. To be fair, unlike the US, Europe doesn't have many growth stocks. This leads to a market that is generally more defensive and moves in a way that's not far from dividend-focused ETFs. Here we have the annualized total return numbers. All three ETFs have been around for more than 7 years, so looking at their 7-year results is the most meaningful comparison here. Each of them delivered an average performance of at least 8% per year. For European ETFs, especially dividend ETFs, that's a very respectable result. Part of this strong performance comes from the fact that the European stock market had an exceptionally good year in 2025. Now let's take a look at the fund size. What stands out is that all three ETFs still have relatively small volumes, even though they've been around for 8 years or more. The Wisdom Tree ETF hasn't crossed the €100 million threshold yet, but it's likely to reach that level very soon. Interestingly, all three ETFs were ignored by investors for a long time and had tiny fund volumes. But since early 2025, their assets under management have increased at a remarkable pace. And while we're at it, we can also check the costs. All three ETFs are still in a very reasonable range, and of course, they're all traded in euros. All right, let's look at the country allocation. All three ETFs offer a very colorful mix of European countries, which I personally like a lot. The Invesco ETF focuses only on Eurozone countries, so markets like the UK, Switzerland, or Norway are missing. But the overall country diversification is still solid. Fidelity and Wisdom Tree, on the other hand, have a strong tilt toward the United Kingdom, which makes perfect sense. The UK has a long and well-established dividend culture. Next, the sector allocation. No big surprises here. We see the classic dividend sectors: financials, utilities, and industrials. The top 10 holdings look like this. Again, a broad mix of companies from different countries, all of them well-known dividend payers. And the weightings are nicely balanced. Overall, I really like what I'm seeing across all three ETFs. Let's quickly check the diversification. Franklin and Invesco each hold around 50 companies, while Wisdom Tree is far more diversified with more than 200 holdings. Whether 50 positions are enough depends on your personal preference. I wouldn't put my entire portfolio into an ETF with only 50 companies, but allocating a portion of your portfolio to such an ETF is absolutely fine. Good. Now it gets interesting. Let's talk about dividends. All three ETFs pay out quarterly, and the Wisdom Tree ETF even has pleasantly unusual payout months. As a quick side note, the Wisdom Tree ETF used to pay only twice a year, but recently switched to quarterly payouts. Even though you receive cash flow 4 times a year, keep in mind that the biggest payout for all three ETFs happens in summer. Why? Because, unlike US companies, many European companies pay dividends only once a year, usually in the second quarter. But that's just how it is. What's really encouraging are the payout yields. In recent years, distributions have been between 4 and 6%, which is genuinely strong. I also looked further back and calculated the average yield since each ETF was launched. The average yields come in at 4.7% for the Franklin ETF, 4.9% for the Wisdom Tree ETF, and 4.8% for the Invesco ETF. Still, very impressive numbers. I like that. And these are also the yields we'll use later for the cash flow calculation. When selecting these ETFs, I mentioned that I care a lot about stable and, ideally, growing distributions. Here you can see all past payouts for each ETF. And honestly, isn't this exactly what we want to see? To me, this looks very solid. Yes, during the pandemic, all three ETFs cut their dividends significantly. These cuts show that dividend stability in Europe is still not as strong as in the US. True dividend aristocrats didn't cut at all. They even increased their payouts. But that's just a side note. The good news is that the recovery came quickly and strongly, so these cuts might be forgivable. Overall, the distributions are relatively stable. WisdomTree and Invesco even show clear dividend growth, which is a key strength. Why is that important? Let's take WisdomTree's 7% growth rate as an example. If the ETF maintains that growth rate, the cash flow would roughly double every 10 years without adding any new money. That would be pretty amazing. All in all, I'm genuinely impressed by the cash flow history of these ETFs. We shouldn't forget that there are many other, even large ETFs out there where the picture looks far worse. All right, let's do a quick thought experiment and invest 100,000 euros into each ETF to see what kind of cash flow we could expect. For this, we're using historical dividend yields. Here you can see the average dividend yields since launch once again. Of course, as always, historical returns don't necessarily match future returns. But in my view, there's nothing wrong with using these yields to estimate what the cash flow could look like. In this dividend calendar, you can see the proportional payouts of each ETF, also based on historical distributions. As mentioned earlier, all three ETFs pay out the largest portion in summer. So, now we invest 100,000 euros into each ETF, and this is the cash flow that results from it. And yes, the cash flow looks very solid, particularly in summer. That's mainly due to the strong dividend yields of these ETFs. And honestly, I was pleasantly surprised by the results myself, enough that I'm considering adding one of them to my portfolio in the future. And now, I'd really like to hear your thoughts, whether on these three ETFs or European dividend ETFs in general. Are you invested in any of them? Or do you hold a different European dividend ETF in your portfolio? Let me know in the comments. That's it for today. Don't forget to like and subscribe. Thanks for watching, and I'll see you next time.